Hey everybody, it's Pete. How's it going? Good morning. Today we're going to actually create a game plan for Tuesday, July 13th, 2021. The magic sheet is full of stuff today. We're actually going to stick around to the end. Today we're actually going to talk about a profit-taking strategy and why sometimes you have a problem or a challenge not holding on to trades long enough or get frustrated about sometimes not being in the right exit strategy. So we're going to talk about two very definitive exit strategies and how to use them. But first, we're obviously going to talk about Goldman Sachs earnings today. We're going to talk about whether or not we should be buying JP Morgan earnings today. Both stocks are reporting earnings, are scheduled to report earnings pre-market today, and there should be a lot of volatility. What's kind of interesting is that the market over the last week or so, probably the last couple of months, has been dominated by the strong technology stocks. Apple has been absolutely on fire. Facebook all-time highs, Microsoft all-time highs, Amazon all-time highs, and they've been getting all the press as they should. However, financial stocks have been kind of in the background, and you'll actually see when we look at the sector rotation in a couple of minutes that they're not even near the top of the second rotation sheet. However, there's some really interesting opportunities, some stronger stocks that are kind of flying under the radar that should absolutely be at least on your tracking journal to see if and when they get up to certain prices that we like to trade them through. So stick around. I just have to do this disclaimer and we'll be back in just 1 second. Okay, so obviously, as again, we have to make sure that we let everybody know that everything that we do here is not financial advice. These are the ideas that I'm looking at right now going into my game plan. And then after the market opens, I make decisions of which stocks to buy and sell. Obviously, you need to make your own decisions. With that being said, we're going to hop right on over to the charts. We're going to start out with looking at the market, work our way down into the sectors. But I also want to talk about a market internal that we use every day that was painting a little bit of a different picture yesterday. Now, it doesn't mean the market's going to change, but it does mean that something happened. If you could imagine when you're driving, you're kind of driving and it's wide open road, and then all of a sudden the cars in front of you, like a couple of cars down, put their brake on, and you can't quite see what's going on, but you're like, all right, that car's slowing down. I better do the same thing. We got that kind of thing going on in what we call the tick indicator. So we're going to take a look first at the market, then we're going to look at the tick, and then we're going to the sectors, and then we're going to jump into that list of financial stocks. And then I promise we're going to finish up with the two different profit-taking strategies. The key to the profit-taking strategies is making sure that you know what type of trader you are, what kind of objectives you have, and that makes it a lot easier to not have regret on when you get out of a trade, because it's very often you're like, oh, I should have held it longer. Oh, I should have got out sooner. But if you know what your objective is prior to the trade, you don't have any of that because you're like, no, that's how I'm running my business. And I can't regret anything. I can't look back on anything. That's what we're going to finish up today, those types of profit-taking strategies after you buy stock, knowing exactly what you plan to do. So we're going to head on over to the market, and you can see the SPY actually continues to grind higher. I don't know if there's any other way to word it. New all-time highs yesterday, continuing to close above the open. Hopefully now you're a part of our community and you've actually understood some of the trading patterns that we talk about. And I want to point out one here that is one of the most popular ones that we use in our community. By the way, if you haven't done so yet and you find these videos valuable, click down and subscribe. I'd really appreciate it. Hit the alert, and if you like the content, smash the like button. Let us know that we did a good job for you. So what I want to point out is right over here, this candlestick here, which is known as a bullish U-turn. You can see here, you can see here. Now, a true bullish U-turn would actually trade back into the previous day's price action. Some people might call this a key reversal, but either way, after you have momentum and the stock pushes lower and then completely reverses and closes near the high. Now, the key to what I just said there, a big part of what I just said there, is that it first has to push lower. This is only valid if it pushes lower and reverses, because if you could imagine, you're kind of trapping one side of the market on the wrong side, where it went down and they either sold or sold short, but then it reverses and goes back in the other direction. That's the kind of price action that we're looking for. So you can see that actually happened over here and happened over here. So this bullish reversal, not again, the bullish U-turn would need to close back in the previous day's trading range, but this bullish reversal has now led to what we call well bid. So if you remember what we talk about well bid, I'm going to come back on the screen again. Well bid is when you're looking at candles that have higher highs, higher lows, and best case scenario, close on the highs as well. That tells you that the smart money, the deep pockets, are buying stocks and they're holding higher lows. They're paying higher prices. That's what we're looking for from days to weeks to months to confirm that real money, big money, is being allocated to the ideas that we're looking at. And that's kind of where we get the conviction to be looking at those stocks and deciding to buy those stocks. So you can see that we actually had that. So a reversal into two well-bid candlesticks into all-time highs. So everything looks kind of good. And when we watch the market intraday, especially as day traders buying stocks, we have certain market internals. And the key market internals that we watch in our community is the VIX indicator and the TIX indicator. We specifically watch the New York Stock Exchange cumulative TIX. Doesn't matter which one. There's one for NASDAQ, but they all kind of give you the same general reading on what the market's doing. So the thing that I want to bring up, the thing that's interesting that I want to bring up is for the better part of the last few months, when the market's been rallying hard and hitting new all-time highs, the tick reading has been staying very strong. It's been staying very positive. So you can imagine there's a zero line here, and it's staying above that zero line without getting into the details of what the ticks do. For the most part, it's been above zero, confirming that the buying pressure is across the board and everything looks great. Yesterday, for the first time, the market was rallying and the tick readings were still below zero. So in other words, there was a greater number of stocks being sold while the indices were still going higher. So if you can remember, we talked about 2 weeks ago, we said the market was feeling heavy, and a few days later, we got that big sell-off. Now we're talking about the massive stocks are actually seeing selling while the indices are still going higher. So we're grinding higher in the SPY, the NASDAQ, the Qs, the diamonds, the Dow. But for the first time, those cars in front of us are kind of stepping on the gas and like, all right, maybe something different is changing here. Maybe it's about to start raining or something. I'm not saying we're reversing. I'm not saying we're reversing hard. What I am saying is something changed. We want the price action to confirm that for us. So if you could imagine now, what are we looking for that to confirm? We have big earnings out this morning. JP Morgan stock is reporting earnings. Goldman Sachs is reporting earnings. Pepsi is reporting earnings today, right? Big earnings this week. So have the indices floated higher while the individual stocks are already discount what they believe is going to happen in the earnings. We don't know. We're going to let the price action. That's why we watch order flow and we do tape reading. So what would we be looking for? We'd be looking for what we saw in Apple and Oracle yesterday, which is known as a bearish U-turn, where we trade higher and then come back in and close on the lows inside of yesterday's trading range. Or we just talked about well-bid candlesticks. Now we'd be looking for well-offered, where the smart money, the deep pockets, are dumping stock, and you see lower lows and lower highs. So that's the price action we'd be looking for. So how does that relate to what we're going to be watching today? Well, there's still plenty of opportunities that we could be taking a look at today. However, something is changing. So how do we trade that? How do we actually get involved in the market when we see that type of price action? How do we drive when we know the conditions are changing? Well, you can still go in that direction, but you're going to drive a little bit more cautiously. Maybe you might have quicker profit taking. Maybe you might have fewer stock selection. You're not going to be across the board and trade anything that lights up in your alert and look for those stocks. So that's kind of how I approached yesterday. We had 5 stocks going into the day yesterday that were on the top 5 list. We only game planned for 2 of them. The other ones didn't meet the criteria to get in, and even the ones we game planned for didn't fill because they didn't trade into the price zone that we were looking for, which we've been talking about that quite a bit. So now we're narrowing our list down a little bit. We just said tech stocks have been kind of strong. So if we go over to now take a quick look at what we watch every day, which is our sector rotation sheet. And this is stuff that you should learn how to do. You can see real estate and basic materials have actually popped up to the top of the list, followed by utilities. So the top 3 sectors over the last week are not exactly sectors that would be lighting it up to say to the market, oh my gosh, I have to get involved in the market. The utilities are going up. Technology, consumer cyclical, they've been near the top of that kind of stuff. Nike near all-time highs, Starbucks near all-time highs. But we're actually going to take a look all the way down here today at financial stocks. And we're going to see some of the ideas that make sense for us today. Now, something I want to point out here, which is, I think, pretty important. we talk about this stuff every day, and then we break it down into other ideas and whatnot. If you're serious about the market, if you want to learn about the stock market and how to get involved in the stock market, I strongly suggest that you join us for 30 days. It's only $49 for 30 days, and we talk about all of this stuff every day. You get my game plan every morning. I do a video where I talk about the exact stocks that I'm looking at that day. And then when the market opens, I talk about which stocks I'm entering, what prices I'm entering, and that kind of stuff. So it really comes down to you watching these videos, and you obviously have a burning desire to succeed in the stock market. If there's pieces missing, again, no hard pitch here, but if there's pieces missing and you want to see how I do all this kind of stuff behind the scenes, click the link below the video and at least learn about what we do and see if it's right for you. Now we're going to jump over into the financial stocks, and we're going to start out with the two stocks that have earnings today. We're going to start out with JP Morgan and Goldman Sachs. But what we're going to do is we're going to look on a little bit of a bigger picture on these. We're actually going to go out to the weekly charts. Now, both of them, let me get this off the screen here. Both of them are actually in recent rallies where you can see over the last four weeks, JP Morgan has actually had more buying than selling, despite the fact that the stock has not really rallied yet. So you can see long term, we're actually resting at some pretty good highs. So now the equation that we have to be looking for is what constitutes a potential change of trend for the stock? What constitutes a continuation of the trend in this stock right now? Well, that's the level that we're looking at right now. So really what we're looking at is below this level of 147 or above this level of 167. That's a pretty big window. But if you really zoom out on the chart, there's a lot of indecision in the stock. It really hasn't gone up. It hasn't gone down. Other than this one move that got pushed back down, we've had a trading range here and we've had a trading range here. So we're kind of stuck. The price that I'm looking for, JP Morgan, which actually a lot of these financial stocks had a good day yesterday. I am looking for JP Morgan to close above 160 after earnings, and then I'm going to start to take a look at it. If it bounces hard today, pre-market, then I'm going to start to take a look at day trading it, looking for it to close over that level. So the level I'm watching right now to buy JP Morgan stock as a swing trade is over 160. I want to see it close over 160. If it opens higher pre-market and bounces, then I'll be looking to day trade it up to that 160 level and then looking for a new swing trade higher. If it breaks down and goes below yesterday's low, then I'm going to leave it alone if earnings don't come out what was expected. Now, if I'm looking at Goldman Sachs, which also is scheduled to report today, pretty much the same picture, but the window is a little bit tighter and the window is a little bit more defined. So you can see, again, if we zoom out the window a little bit here, as of right now, this level down here, the 348 level, would constitute a bearish tone or bearish reversal of the most recent price action. And getting above, which is actually this week's high, we're looking at the 384, 385 level. If Goldman Sachs bounces and gets above that 384, 385 level, right now it's around 382.50, then I would start building a position. Goldman, in the price action order flow that we're looking at, has a little bit better tape and a little bit better order flow. So if Goldman bounces, I'll be looking to initiate a swing trade in that just a little bit sooner with the goal of it pushing above 400. Working our way over into some other financial stocks, there is some other really nice opportunities that have good order flow. So we're going to stick with this sector. So I'm going to pull it up right on the screen, and we're going to work our way over into Morgan Stanley, which has had a really good run. And if you can take a look and see what it did over the last couple of days, bullish gap and just a tremendous day into the 94 level. So Morgan Stanley, which does not have earnings today, is really the 94 levels, the price action that I'm looking for. It's about $1 below that. So I'm going to rattle off a list right now of ideas that are on my tracking journal, which hopefully will get into my trading journal and my game plan. So Morgan Stanley, Citigroup, not as strong. As a matter of fact, Citigroup is on the opposite end of the spectrum. So I want to give you complete tape reading principles here. So Morgan Stanley versus Citigroup. And then we're going to take kind of a little bit of a different turn and head over into credit card processing. So Capital One actually getting up to that 166 level that we've been watching. Discover Financial actually did break out yesterday. And American Express is on the precipice of a breakout as well. So those are the financial stocks that we're going to be leaning on right now. Obviously, I gave you the levels that I'm going to be watching in Goldman Sachs and how I plan to trade them. So now we're going to kind of segue into what we promised before, which is profit taking. One of the biggest things, one of the biggest challenges that traders have right now is not knowing what the trade should look like on the profit side after they get in. They just want it to go in their favor, and then they start to be profitable, and they're like, oh, I'm not sure what to do now. And you get out because you just want to book profits, but then you see the thing rocketing, and then you have, oh, I'm so sad that it just kept going without me. So what you really need to decide, there's two terminology that when most traders buy stock are one of two. It's usually you're a momentum trader or a trend trader. Momentum traders are looking to exit into the push in their direction and have some very short-term price action that they exit for. So for example, when a stock is going higher and higher and higher, and you caught it, you got it at the right spot, generally speaking, you'd be looking to exit either at the previous day's low or at the previous close, whatever the number is. Anytime that thing is reversing quickly on the same time frame that you bought, that is your exit. So you might have well bid, well bid, well bid, well bid, and then a reversal. You're getting out on that reversal, and then you just go to look to the next trade. So that would classify you as a momentum trader. The upside to that is you're not giving back that many profits on that most immediate move. The downside is that you are missing out on the next bigger move. You technically have to look for the next trade and do it again and do it again. And there's nothing wrong with that. It's a strategy. It's a very common strategy, especially for day traders buying stock. The other one would be a trend trader. And a trend trader has a different mindset. A trend trader is okay with letting unrealized profits pull back in exchange for a next bigger move. So let's say you might be long a stock, you bought a stock and it went up, and you're like, okay, this looks great. There's still more room to go on the trade. You're okay with letting unrealized profits pull back in exchange for that next big move to the upside. And then eventually at some point you also have a level that if it pulls back, you get out. But when you're letting it pull back before it goes up again, you haven't hit that level. So I'll just give you an example. Maybe I'll just something as simple as a moving average. Let's say you use a 20-period moving average and you want to take a much longer approach to your trades. Maybe you're a position trader in stocks. So your stock goes up and pulls back. So you have a nice profit on the trade, but now it pulled back a little bit, but it hasn't closed below the 20-period moving average. So you're okay. You're still in that position. And then it starts to take off again and you capture another bigger move. So you let that paper profit go down in exchange for the bigger move. The next time it goes up, pulls back, and closes below the 20-period moving average. This time you take the profit, hopefully at a higher level. So there's trade-offs between those two trading strategies. You just need to know which one you prefer to be. You need to know your risk tolerance. You need to know how often you could be in front of your screen, how many trades you want to make, all of that kind of stuff. And then you also put trade management into that as well. So stuff to think about. If you have questions about this kind of conversation, definitely leave a comment below. I'd love to hear from you, and we can have another video in the future about getting a little bit more specific on that. So thank you so much for joining me today. I really appreciate that you chose to be here. If you have any questions, definitely leave a comment below. If you haven't done so, click down and subscribe, smash that like button. I really appreciate it. And keep an eye on those two financial stocks today. And the other ones that we mentioned, they're going to be in the game plan soon too as well. Have an awesome day, everybody. I appreciate it.